Welcome back to the Lone Ranger Radio Show. Bruce Woodburn, Cross Country Mortgage. Yes, I'm the Lone Ranger, and I'm here to help arrange a mortgage loan for you. Purchase, refinance, home equity line of credit, VA, FHA, USDA, jumbo, super jumbo. Got a couple of them I'm doing this month. That means loan amounts over $2 million. Okay. Physician loans. 100% financing, no PMI. How do you like them bananas, you physicians over there making all that money but have a ton of student loans? I'm going to tell you something. You think your bank is the deal? You haven't talked to the loan arranger yet. Let me help you as a physician. Matter of fact, let me help you get your finances in order. I'm not a financial analyst. I don't have a license to help you with your investments, but I show people what I do and how it's worked for me. And I'm telling you what, if you do better in the market than I do, then I'll listen to you. Okay. I do pretty damn good. Now, I'm a 10th grade dropout. I don't have a finance degree. I do have a PhD, a public high school diploma. It's the equivalent to one. They say it's a diploma. I got the piece of paper, but I never finished the school. I only took the test. You know what? You guys have heard my story. And this is it's not my sob story, but I lost my mom when I was 15. My dad passed with a heart attack 8 months later. So I was orphaned at 16 years old, just turned 16, had no family in the United States. My brother was going off to Florida State. My younger brother was only 12. So I was shipped up to Canada to live with an uncle that owned a junkyard. And great uncle, loved him. One of my favorite people in my whole life and really helped me out. Tough man, very tough guy. And he passed recently and it was a big loss, but he took me in. But you know what? My dad was a builder. My mom was a housewife and we had a middle-class lifestyle and we always had a boat and took vacations, but we weren't rich, but we did okay. And then moving up to Canada, that was a different story for me. That was like, it was very blue collar. And I'm a redneck. Okay. If I say it's blue collar, it's blue collar. Okay. The attitude there was everybody should do a little jail time just to get some experience. Okay. That wasn't really my dad and mom's idea for my outcome. But both of my brothers got their college degrees. I did not. I'm a high school dropout. Last grade I finished was in 9th grade. I quit in the middle of the 10th grade. And that was it. Never went back to school. But now I run and I'm the regional vice president of the largest mortgage company in the planet. Okay. That's something to be said for that. And the reason I tell you that is because I run across people that don't have the education, but they're smart. Man, they're smart. So I'm telling all you young people, there's a couple of things that you could do. First of all, you don't have to have a college degree, but do get licensed in some type of a trade, HVAC, plumbing, electrical, something that AI is not going to take over. Second advice I have, buy your first house in your 20s and buy a home every 3 years for 20 years. You do that, you're going to be the richest one of all your friends. Okay. Unless you're next door neighbors to like a Morgan and Morgan or something like that. They might be a little richer, but you're going to do very well, very well. So I came up with this plan called Leapfrog, and I have taught hundreds of people my program that I developed. And I developed it because I didn't have a lot of money to put down when I was buying properties. I couldn't do it. So I figured out a way to put minimal amount down, live in the house, keep it for 2 or 3 years, buy another one, use that one as a rental, and keep doing it and rinse and repeat. And it's worked really well for me. And I have some of my students, I call them, that have been through my program. I've got one student now that's in my program. They are into it they got about $10 million in real estate and over $5 million in equity. And they just started 4 years ago, maybe 5 at most. $5 million in equity. I'm telling you, folks, it really does work. I'm not going to lead you down a path. Listen, 90% of what I do is to help you become debt-free, not put you into debt. Even if I get you a mortgage, I want to show you how to become debt-free. Now, sometimes I will say, don't pay that mortgage off. I had a client call me and wanted to pay off a 2% mortgage that I did for him back during COVID. I'm like, why do you want to pay that off? It's free money. You're going to pay a $300,000 debt off at 2%. Put the money in the market. Do you know how much a 300,000? Let me just put it in perspective. I'll give you another story. This happened this week. I had a client about a month and a half ago, 2 months ago. They bought a home over on the Intercoastal Waterway. The home was, I think, 1.25 million. Okay. And I did about a $795,000, I'll call it $800,000 mortgage for them. And they had a house to sell, but they didn't want to sell it before they moved into the new one. So I have a recast where you can put a lump sum down on a mortgage that I've already closed on, and I'll readjust the payments based on the new balance. It's called a recast. So they were going to put $300,000 down toward their mortgage. By the way, if you have a question for me, write this number down, 813-213-4009 or 407-706-3313 or webringyouhome.com. So they were going to put $300,000 down toward the mortgage. Now, that was going to save them about $1,750 a month in payments. It would save them $753,000 over the 30-year life of the loan. Now, listen to me, folks. Was going to save them $753,000 by depositing $300,000 down on their mortgage to reduce it. It's going to save them $753,000 over 30 years. Now, I ran an analysis for them so that I could compare that to investing the money. So here's what I did. I put it all in Chat GPT because I just was curious to what it was going to come up with. It was freaking amazing. So I said, what if I took $300,000 and invested it in the market at 8%, 10%, 12%, and 15%? Give me the number. And it said, if you invest it, even at 8%, they're ahead of the game by $128 a month. At 12%, it was like $450, and at 15% interest rate on 300,000, it was like $1,700. It was huge. It was the same amount that they would have saved in their payment. It was $1,750. So it was huge. So I said, okay, it's saving him $1,750 a month, and it's saving him $750 over the life of the loan. But if they put $300,000 in the bank and let it sit there for 30 years, how much would it be? $19 million compounded interest at 15%. Now, it was like 10.5 million at even 10%. Now, remember, S&P 500 averages around 12% per year. Averages 11.8%, I think, is the exact number. So I went back to them and I said, well, it's going to save you some money if you pay down the mortgage, and I'm happy to do a recast for you. But I ran these calculations for you, and they went, holy moly, that's insane difference. Do you have somebody that can help me invest that money? 100%. So I turned them on to my financial advisor. They're unbelievable. These people are insane. They do monthly and quarterly meetings with all their clients on Zoom and go over all the stuff they're doing. If you want somebody, now they're only dealing with really higher net worth. Most of their clients have several $1 million to invest so they can really work it. But if you have, say, 300 and above, and you don't feel like your money's working well for you, let me know. I'll be happy to make a referral for you. I don't get paid for that referral, by the way. 407-706-3313 or 813-213-4009, or go to webringyouhome.com. That's webringyouhome.com. All right. I promised I wanted to cover a couple of other things with you, and one of them is the tax relief. So how many of you want to know about what's going on with the current tax relief? Huh? Anybody want to know? Want to know? I'm going to give you an update. All right. One of the questions I get asked more often than not is what's happening with the Florida tax bill? What's going on with that right now? Are they really going away? The short-term answer is not yet. But one of the biggest property tax proposals in Florida's history is heading to the voters in November. So here's the deal. During the special legislative session in June, Florida lawmakers, approved a constitutional amendment known as the CS/HJR1F. Okay. You don't need to remember that. I remember. Okay. It's to save our homes from excessive property taxes. Because it changes the Florida Constitution, it does not become law automatically. It will appear on the November 3rd ballot, and it must receive a 60% or greater vote of approval. 60%. So that's not going to be easy because you're going to get a ton of naysayers and a ton of haters. So let's just go through this. Okay. Beginning January 1st, 2027, the current homestead exemption will increase, if it's passed, from $50,000 to $150,000 for non-school property taxes, and only on homesteaded properties, okay? Not your investment properties. Beginning on January 1, 2028, that exemption will increase again by up to $250,000. So they'll add another $100,000 to it. So now, if you have a house that's worth, say, 250 to 300, you probably be paying no taxes other than school taxes. That's it. And your non-ad valorem, which is your garbage sewage. It's not much. For many homeowners, that could mean substantial annual property tax savings, depending on the value of your home. Okay. What about eliminating property taxes? Okay. Governor Ron DeSantis made it clear that his long-term goal is a broader property tax relief for Florida homeowners. This amendment is viewed by supporters as the first step, not the final step, towards reducing the property tax burden on homesteaded properties. Okay. So here's something important. Under the current proposal, homeowners who establish their Florida homestead by the end of 2026, this is important, folks, would be eligible for the expanded exemption when it takes effect. People who become Florida residents on or after January 1st, 2027 might have to wait up to 5 years. This means if you're planning to buy or move to Florida, timing really matters. And when I say it really matters, the other side of the debate, supporters say homeowners need the relief. Property taxes have increased dramatically as home values have risen. Florida families deserve to keep more of their homes, and they feel like they're held hostage by their taxes. If local governments collect less in property taxes, how will they fund services such as police, fire, parks, roads, libraries, local infrastructure? These funding questions will likely be one of the biggest issues when it comes to this debate. But here's the thing. We're only eliminating homestead. The homestead amount of taxes that are collected is a tiny bit, except for some counties like Levy County, where they don't have a lot of other ways to collect. There's no businesses to collect the taxes in, right? If you're thinking about buying a home, don't wait, because waiting could cause you to miss out on the entire amendment. Vote yes. It's a stepping stone. Now, when we come back, I want to finish up a little bit more of this, but I've got to take a minute just to take a short break. So in the meantime, stay tuned. We're going to cover more about this tax break and how it's going to benefit you and whether you should vote yes or no. So don't go anywhere. Call me now if you have any questions or you need a mortgage. I will take great care of you. Call me at 813-213-4009 or 407-706-3313, or go to webringyouhome.com. All right. When we come back, more about the property tax relief, how it saves you money. I want to talk a little bit more to my physicians, and I want to talk a little bit more to home buyers that are sitting on the doggone fence waiting for things to change, or they're getting ready to change for you, but you ain't going to like the answer. So stay tuned. We're going to be right back with more of the Lone Ranger Show.